Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish but eventually bullish scenario, as we do expect continuation to the upside in a bigger zigzag in a 5-wave A, 3-wave structure in B, and then continuation to the upside in a wave C, where the most common target for wave C is between the 1 and the 1.236, taken from the low to the high of A to the 0.5 here, giving you a target between 38.3k and 39k, which is nice because we also have the golden target box over here sitting between 38.5 and 39k. Now I mentioned the 0.5 in particular because at the 0.5 over here we have important support. If we open a target box, we have a support box over here between 36.5 and 36.7k, and inside that support box we have this point of control. So here of this range you can see a wide line, which was the point of control of this small range over here, nicely respected, moved towards the downside. And from this range over here there's also a point of control, which is this wide level right on top of the 0.5 at 36.5k, which is important support to the downside. In this scenario, for this wave B, we are then looking for a WXY double combo in a W flat X zigzag, and then another ABC to the downside in a zigzag for wave Y. In a sideways double combo, wave W and wave Y are not allowed to be the same structure, so if W is a flat, wave Y can only be a triangle or a zigzag, and in this scenario we're looking for a zigzag to the downside, where the invalidation is price taking the high of A over here, because that is not allowed in a zigzag ABC. And in wave A we then also have to look for 5-wave structures, and that's a little bit of a problem, lowering the probabilities, because this looks very 3-wavy instead of a 5-wave structure, which is what we actually wanted to see. Now for a wave B, all of the fibs that you see here on the chart pulled from the low to the high of A are common targets for a wave B. If we then look at the bullish scenario over here, then we're also looking for a zigzag towards the upside where wave A is finished, but now wave B is also already finished and in a W flat X zigzag, and now this move to the downside is a 3-wave structure in a zigzag as well, finishing wave Y, finishing wave B, looking towards the upside for a wave C. Now looking towards the upside though, from this low, we can see that there's been of a 3-wave structure going on. And when I saw this 3-wave structure, price moving down also and taking this low, I thought of a diagonal structure, which would be nice for a Sunday range as well, where basically we are grinding slowly towards the upside, right, for then a wave 2 early next week to grab some of the lows in the liquidity, and then a continuation to the upside in a bigger wave 3. In this particular scenario, for this wave 1 in a leading contracting diagonal, all of the waves should be zigzag structures, so 3-wave structures, just because wave 1 is a 3-waver. So 3 waves in 1, 3 waves in 2, potentially on the lower time frames like 3 1 minute, 3 waves in 3, 4, and then eventually 5. And we do have some resistance above. Over here, the blue box sitting between 37.3k and 37.4k can be interesting resistance for price for the end of a wave 1, and then start a wave 2 for then a wave 3 towards the upside. Now in a contracting diagonal, wave 3 does have to take the high of wave 1 and wave 5 has to take the high of wave 3. The thing is, however, that wave 3 is not allowed to be longer than wave 1 in price. So if you take a trend-based fib from the low of 1 to the high of 1 to the low of this wave 2, then the 1-to-1 over here is the invalidation. And you can see that is very close to actually the high of this wave 1. So you want the wave 3 to take the high of 1 in a contracting diagonal, but not hit the 1-to-1 over here, which is sitting at 37.232, right? So that's very close for the invalidation, and something that we do have to keep an eye on. Else we have to think about expanding diagonals, but expanding diagonals are rare. The invalidation for this scenario is price moving towards the downside and catching this low over here. If we look at this third scenario, then we first go sideways before continuation to the upside. Again, we're looking for an ABC zigzag to the upside with a WXY, W flat, X zigzag, but Y is now a triangle. In this scenario, we have a 3-wave A, 3-wave B, then we're looking for a 3-wave C, or C is already in, and then eventually DE for then continuation to the upside, where the invalidation is taking this low over here. You don't want to see it, but also because we are still working on this triangle in this scenario, A, B, and then C, D, eventually E, you also don't want to see this high taken just yet. So if price would now move towards the upside and take this high before continuing this structure, then also this scenario is invalidated. The triangle is also interesting, even though it's very, very early to call, but it's interesting because we had a 3-wave move to the downside and because it is still weekend, and the weekend is famous for its ranges, not for its impulses, and that is why a triangle is at least a scenario we also have to keep in mind, where we are just looking for a range throughout the Sunday, and then nearly next week we look for continuation to the upside. And then finally, if we look at the bullish, then bearish, and then bullish scenario, because we are looking for upside, downside, and then a continuation to the upside. Over here, we are looking for, again, a zigzag, right? Wave A, wave B, and then a wave C to the upside, where in wave A, we have a WXY. So a WXY structure in a flat zigzag is allowed to be a subdegree count of a wave A. A WXY is not allowed to be a subdegree count of a wave W. So the fact that we know, hey, we have a WXY over here, right? High probability in this case, that can be a wave A. That means that wave B has to retrace to at least the 0.9 Fibonacci for a flat, because you're looking for a 3-wave in A, which now means you got to look for a 3-wave B and then a 5-wave C in a flat structure, and then a wave A, B, C. And for wave B, you at least want to hit the 0.9, which is taken from the high of A to the low of this A, which is sitting at 37.4K. After B, we are then looking for a move to the downside for wave C, where again, this interesting area over here, sitting between 36.5 and 36.6K, can be a good area of support. And below this area over here, we also have this low still, which is in confluence with the golden pocket that you can take from the low to the high over here. So there is some additional support below, which is interesting. The golden pocket is always interesting and something to keep an eye on, which is in confluence with this low for then maybe a liquidity grab, close above, and then move towards the upside, which is also something we have to keep in mind in case price falls through this box. Now the most bearish scenario, of course, is continuation, where you have a wave 1 or A, 2 or B. Now you're looking for wave 3 or wave C to the downside, but as explained in the previous video, there's many different reasons why currently that is not a high probability scenario, hence the reason I won't cover it in this video, but make sure to check out the previous one if you want to know more. If we look at the CVD divergences, we had this drop over here. And then overnight for me, price moved to the upside, came down again, creating bullish CVD divergences here, and also bullish CVD divergences again when price came back like this. Higher lows on price, lower lows on the CVD, which is a bullish CVD divergence, as you can see over here. Higher low in price, right? Or sorry, higher low in price here between these two wicks. Lower low on blue, lower low on yellow as well, so on both. And then here, higher low in price, but then again on yellow, lower low on the CVD line, which is a bullish CVD divergence. Now this one already played out as price took this high. This one over here has the target being this high over there, right, at 37,192. If we then finally look at the probabilities of the different scenarios, then currently the higher probability scenarios over here are either the bullish scenario with then a diagonal structure as shown, or the bullish bearish bullish scenario, where we're going to be looking for a continuation of this range over the weekend in a bigger flat, and then an A, B, C. And on the second place, lower probabilities at the moment, we have the triangle scenario, so the side bull, which is basically this one over here, or we have the bear bull, where we are then looking for this to be a 5-wave, then a 3-wave, and a 5-wave. Main reason why this has lower probabilities is because A looks very 3-wavy, not 5-wavy, and that's not what you want to see for wave Y. You want to see a 5-3-5 in this particular scenario. In the side bull, of course, we continue the range for a triangle, so that's something we have to keep an eye on. And for number 1 over here, the bullish scenario would then be a contracting diagonal, but invalidation is closed, so keep an eye on this one, right? And the bull bear bull means the flat scenario. Now you know the invalidations, you know what I'm looking for, so hopefully you found this video helpful or valuable, please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.